Hello everyone, I'll get started in just a moment. Hello everyone, welcome to Options with Doug, streaming live on Monday, Wednesday, and Friday at 1:30 p.m. Eastern Time on Bookmap Discord and the Bookmap YouTube channel. Before I get started, I need to go through the disclosures. General disclosure, all Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel that's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel that I'll go through in just a moment. And I'm also on X, and my name there is @DougPless. Here are the key tenets to my approach to trading. This is the basis of my approach to trading. I believe that options trades and market maker hedging activity are key drivers of price in many stocks and futures, and certainly in the large cap tech stocks and equity index futures that I follow and trade. And for the S&P 500, SPX is the underlying index, SPY is the ETF version of that index, and the ES futures contract is a derivative of SPX. And when traders buy and sell puts and calls in SPX and SPY, market makers take the opposite side of those trades and they hedge their delta exposure with ES futures. And for the NASDAQ 100, NDX is the underlying index, QQQ is the much more liquid ETF version of that index, and the NQ futures contract is a derivative of NDX. And just like the S&P 500, when traders buy and sell puts and calls in NDX and QQQ, market makers take the opposite side of those trades and they hedge their delta exposure with NQ futures. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis. And for setups, and when I talk about setups today, I will be focusing on an underlying asset, and setups in that asset can be taken with futures contracts, shares of stock, or options, depending on the asset and the way you like to trade. Questions and comments are welcome, and I will be watching both the Options-Doug chat channel and Discord, as well as the chat and YouTube for your questions and comments. Please feel free to post. I'll do my best to answer your questions. And hello, Butowski, welcome, glad you're here. Hello, Stephen, welcome, glad you're here as well. All right, here's my agenda for today, Wednesday, August 21st. First of all, I want to go over news items, economic data, and events for today as well as the rest of the week. Then I'll go through my positional analysis. Then I'll review some setups from earlier today, and then I'll take a look at the live market. And note the FOMC minutes do come out at 2 p.m. today. I will stop wherever I am, and we'll take a look at the live market at that time. All right, let's start with economic data and events for today as well as the rest of the week. All right, for today, there was some interesting news this morning and interesting reactions. Let's zoom into this is the ES Futures and Bookmap. Let's zoom into this a little bit. So I'm going to zoom into about the first 90 minutes. All right, so apparently the payrolls revision data from the Bureau of Labor Statistics, BLS, was supposed to come out at 10 a.m. today, and at right around 10:13, news came out that the data was late. That's the reaction to the late data, and that was quickly bought right around the SPY 559 level, just above the key SPX 5600 level. And then at 10:33, the data actually came out, and it indicated a decrease in jobs data. Initially a slightly bearish reaction, then a bullish reaction, setting up a great short. I'll talk about this in more detail, much more detail in just a few minutes. So this short setup right here. All right, then again, today at 2 p.m., the FOMC minutes come out. So again, we'll stop whatever I'm doing. All right, tomorrow there is some normally low impact data that comes out tomorrow morning, PMI data at 9:45, home sales at 10. You never know what's going to move the market these days. And then, of course, the big event after the FOMC minutes, probably a much bigger event, is Jerome Powell speaking at the Jackson Hole Symposium on Friday at 10 a.m. Eastern Time. So that'll wrap up the week. All right, so again, this is the ES Futures and Bookmap. And before I take a closer look at this chart, I want to take a look at a higher time frame. I'm going to go to the underlying index. And this is SPX, again, the underlying index. This is a one-day chart in Thinkorswim. We've all seen this chart before. I'll go through this quickly. This year, so a huge rally last year. Correction began this year, April 1st. Rally resumed on the Monday after the April options expiration. That was a put-dominated options expiration. Then the current correction, the latest correction began on Wednesday, July 17th. That was VIX expiration. And note today is another VIX expiration. All right, so let's pick that up now with a 1-hour chart. Thinkorswim 1-hour chart. Here's the July 17th VIX expiration, 3 days before the monthly options expiration. That may be difficult to see, showing that vertical line there, vertical red dashed line. That is the July expiration, options expiration. And a couple of weeks ago, SPX made a low of 51.19, and that was the weekend of the yen carry trade unwind. After that, SPX rallied, came back down, tested the 5,200 put wall, 5,200 put wall at that time. Jobless claims came out, better than expected. Good news is good news, and the market proceeded to rally 500 points in a very mechanical manner. Looks like some algorithms coming in and buying every day. All right, so that's up to date. Now the key level is the absolute gamma strike. So I'll talk about that in just a minute at 5,600. All right, so let's take a look at the levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move. That's based on the options market. And note the upper daily expected move is just slightly above that. So it may be difficult to see, but both lines are almost overlapping there. So that is the upper weekly expected move. SPX did test that level earlier today, both levels. Then again, the dashed blue line showing the upper and lower daily expected move. These are both based on the options market. The weekly expected move based on the closing price for SPX from last Friday, and then the daily expected move based on the closing price for SPX from yesterday. And I do post those levels in Discord every day the evening before. All right, the dark red lines on this chart are showing Spotgamma levels. These are available to Spotgamma subscribers. They're based on gamma-weighted open interest. I'm going to point out the key daily levels. First of all, the put wall is at 5,300. That's a strike with the largest net negative gamma that can be expected to act as support. And the next level up is the volatility trigger at 5510. That is Spotgamma's proprietary volatility and gamma flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. And note, for most of this time period, gamma notional has been negative and shifted to pretty firmly positive yesterday. I'll talk more about that in a few minutes and what kind of behavior you can expect in a positive gamma environment. And note for today, again, SPX trading above the volatility trigger in a positive gamma environment. Gamma notional, we'll take a look at that in just a minute, was positive for SPX at the beginning of the day. All right, so that's the volatility trigger, put wall, volatility trigger. Volatility trigger did shift slightly higher, just 5 points higher from yesterday. And then finally, the level that I mentioned before, the absolute gamma strike at 5,600. That's a strike with the largest absolute and positive and negative gamma that can be expected to act as a magnet for price in a positive gamma environment. And then the call wall up at 5750. That's a strike with the largest net positive gamma that can be expected to act as resistance. So the range on the downside, 5300 put wall to the 5750 call wall on the upside, with most of the gamma-weighted open interest concentrated at 5600. And that level of 5600 did move slightly higher from yesterday. So both the volatility trigger and absolute gamma strike shifted higher for SPX, and for SPY, the volatility trigger also shifted higher, but the absolute gamma strike shifted lower. All right, let's wrap up our view of SPX with a 1-minute chart. So a couple of key things. First of all, let's take a look at yesterday. That's this dark shaded portion right here. This is the 5600 level. I'll show that absolute gamma for the level in just a minute. Note that price is oscillating up and down around that level. Gamma notional yesterday was firmly positive. And in positive gamma market makers are trading against price, and that can tend to lead to pinning at levels with very high call gamma. Market makers, as price moves up, market makers are selling, and as price moves lower, market makers are buying, moving price back to that 5600 level. So one way to trade this, I find directional trading pretty difficult in conditions like this, but a good way to trade this is a neutral position like a butterfly or 9 condor for you options traders, centered at 5600. All right, moving on to today. So again, yesterday, that level was the 5600 level, was the level with the highest call gamma. It was not the level with the highest net net positive gamma, but it was the level with the highest total called gamma. And today it is the absolute gamma strike. And just above the upper daily and weekly expected moves acted as resistance for that sharp move up. We'll take a look at the hero pattern in just a minute when we take a look at setups. Very telling hero pattern for that reversal lower. Back down from the upper weekly expected daily move, upper daily and weekly expected move back down to 5,600. All right, so that is the SPX. Let's go to Bookmap now. So in Bookmap, I have my own cloud notes. So I can show SPX levels, SPY levels, and then key ES levels. So here are my cloud notes. Let's take a look at some of the key levels. First of all, here's that 5,600 level that I was talking about. That is SPX 5,600. And there is an offset between a difference between the price of SPX and ES. And today it's right around 22 points, maybe a little bit higher right now. I'm using 22, so I'm showing SPX 5,600 at ES 5622. I also have SPY levels on this chart. Here's the SPY 558 volatility trigger, and then a SPY combo level just above that. Note also this 5620 level, SPX 5620, did act as resistance earlier this morning. Need to zoom out just a little bit more. So key levels in play. 5620 resistance. SPY 559 just above the SPX 5600 level. Then this is the ES, upper daily and weekly expected move, acting as resistance. Great short setup there. Back down to 5600. This SPY 560 level, there's been a lot of congestion around that level. Note the point of control is just above that level. So those are the levels in play for the S&P 500 today. Again, we'll take a look at setups in just a few minutes. Let's take a look at NASDAQ. These are NQ futures and Bookmap. Let's take a quick look at the underlying index charts. Here's QQQ. Levels in play. 480 is the absolute gamma strike. Then above 484.04 is a combo 2 level. This level right here. All right, so those are QQQ levels. Let's take a quick look at NDX. In NDX, there's only one level in play. This is the 19,799 combo 4 level. Looks like it did act as resistance earlier today. Now it looks like price is trying to get back up to that level. All right, so levels in play earlier today. QQQ round number levels, 481 support, 482 resistance. And that looks like that is the NDX combo level just above that white line. And then key for today is the upper daily and weekly expected move for NQ. All right, shifts in levels for NASDAQ. Both the NDX and QQQ volatility triggers moved higher, so that makes all four volatility triggers moved higher. SPX, SPY, NDX, QQQ, and for QQQ, the put wall moved lower. So minor shifts in levels overall today. Not really enough to base a thesis on these shifts in levels. All right, let's wrap up our positional analysis by taking a look at gamma notional. This is market maker's position on the gamma curve at the beginning of the day. For SPX, SPY, NDX, and QQQ. Note all these numbers are positive, and I would say for SPY, NDX, and QQQ, almost neutral, and slightly positive for SPX. So what this means, in a positive gamma environment, traders are short calls for an index, market makers are long calls, hence the positive gamma. They have to trade against price. I think this, looking at this data every day and the relationship to price to volatility trigger, can provide a significant edge, like looking at yesterday with a very positive gamma environment, and all these numbers are lower than yesterday, still positive but lower than yesterday. So yesterday, much more positive gamma environment, expecting range-bound behavior, again around the, in this case, this is from today, but it's similar to yesterday. This is the 5,600 level. This is absolute gamma, SPX absolute gamma, market maker's position. Orange, positive calls, blue, negative puts. So you can see most call gamma is at 5,600, and price was oscillating up and down around that level. Those levels with very high call gamma can tend to attract price for pinning price action. So yesterday, good trade for a butterfly or an iron condor, 0 DTE, concentrated or centered around that 5,600 level. All right, that wraps up my positional analysis. My thesis for the day was looking for more moderate volatility than yesterday. And again, the shifts in levels were not significant enough to provide any insight for a directional bias. All right, so that's positional analysis. The key today was to watch reactions at levels as well as what options traders are doing with Hero. So that's what we're looking at now. We're moving on to execution from positional analysis. Everything that we've looked at so far, other than Bookmap, is based on static data. And now we're going to take a look at execution, move on to real-time data. Execution. So I'm going to start with the S&P 500 and take a look at what options traders are doing. This chart is the Hero signal. This is available to Spotgamma subscribers. Hero stands for Hedging Impact Real-Time Options. Again, it's real-time. What this chart is showing is options trades and market maker hedging activity in real time for a combined signal of SPX, SPY, XSP, and ES futures. There are two lines on this chart. The white line is the price for SPX, and the purple line is the Hero signal. That's the total Hero signal, combining puts and calls transactions for those four index components. So this is the index signal. A rising Hero signal indicates traders are taking positive delta options positions. They're buying calls and or selling puts. And a falling Hero signal indicates traders are taking negative delta positions. They're buying puts and or selling calls. All right, so that's the first signal that we can take a look at for the S&P 500. That is the index signal. There's another signal we can take a look at. That is the S&P 500 equity signal. What this chart is showing is options trades and market maker hedging activity for all 500 stocks in the underlying index. So that first was the index signal. This is the equity signal. Typically it is a little bit more smooth than the index signal. And on the other hand, actually there's looks like a stronger correlation in price between the index signal and price today than the equity signal. So let's stick with this signal. I'm going to open up full screen. We'll take a quick look at the equity signal. So from overall, from around the open till right around 1042, most of this time, this overall the hero signal was pretty neutral, chopping up and down. Same for price. And then after the actual payrolls data came out, options traders started taking positive delta positions, creating that move higher, and then sharply reversed in what Spotgamma is now calling the Matterhorn pattern, a reversal pattern, a bearish reversal pattern. That is the Matterhorn pattern, and this is a great example of it today. The Matterhorn pattern setting up that great short at the upper weekly and daily expected moves for both SPX and ES. Let's take a quick look at the equities. And note in the morning, the equity signal was much more bullish. Here's another Matterhorn pattern right at the same time, right around 1042. Price reverses lower. The hero signal reverses lower, and price moves lower, setting up that great short. So let's go take a look at the Bookmap now. Go back to the S&P 500. Zoom in. Take a look at about the first 90 minutes of price. So remember the reactions to the jobs data that came out earlier. This was the final reaction. Let's take a look at Bookmap. The volume dots in Bookmap show market buy minus sell. Magenta dots indicate more sellers than buyers. Green volume dots indicate more buyers than sellers. Let me turn off something here. I'm going to turn off the on-chart indicators so we can just focus on the volume dots and the levels. So note the small magenta volume dot there, indicating buyers are exhausted, lower volume. Buyers start to come in. This is VWAP, so reversal at VWAP just below the SPY 560 level. Aggressive buyers come in, quickly take price up to the expected move levels, and the options traders start taking negative delta positions in both the index components and all 500 stocks in the S&P 500. Buyers are exhausted. Buyers are exhausted. Aggressive sellers come in, set up a great short again at the expected moves, back down to the 5,600 level. Right here. All right, I'm going to clear. So it's 2 p.m. now. Let's watch and see if there's any reaction to the FOMC minutes. And Hector asks on S&P 500, is there a special meaning that Hero is moving too close to price? I don't think so. I'm not quite sure. I don't think so. So that's, if there's a very strong correlation between hero and price action, that just indicates that options traders are having a strong influence on price. And W Black, welcome, glad you're here. Ask, can Hero overlay Bookmap in real time? At one time, the original Hero was a Bookmap add-on. That was the only Hero available. That was several years ago. That has long, so that was in the available as again an add-on available in the subchart, and that has been deprecated some time ago. So Spotgamma shut that down and shifted to a web-based only hero signal. Again, at least 2 or 3 years ago. So I think one thing I may need to clarify is when I'm trading, I have multiple screens. I actually have 2 computers. So I have Hero on one, Bookmap on my main screen, and then Trading Platform on another screen. So I'm watching all 3 at the same time. You know, of course, I'm only presenting on one screen, so all I can do is switch from screen to screen as I'm presenting. So that may cause some confusion, but you know, the reality for actual trading, it is not a problem. And there's so much more capability in Hero, the web-based version, than there ever was in the Bookmap add-on version. All right, so it looks like initially a little bit of a bullish reaction. Resistance at the 561, 56.20 level. Aggressive sellers start to come in. I'm going to turn the stops and icebergs back on. It'll take just a minute for that to load again. The reason I'm doing that, it looks like there is some reaction. This light blue line on the subchart showing iceberg orders. Those are iceberg orders large traders use to hide their size. Looks like I need to filter that a little bit. I'm going to turn that back off and then go back later. And it was updated overnight. It looks like the filters are gone. So I'm going to turn that off and I'll work on that later. It was just showing too much. So we'll just focus on the subchart here. Large traders initially selling that move with iceberg orders. And it looks like that was actually a little bit before, or just before 2 p.m. Then more large traders coming in with iceberg orders buying. All right, let's see what options traders are doing now. So we're looking at the equity signal. Let's go back to the index signal. Trending up. Flow alert comes in, indicating significant options activity right at 2 p.m. Let's shift to puts and calls. So the orange line is showing calls. A rising orange line indicates traders are buying calls. Market makers are selling calls. And in this case, for the index signal, they have to buy ES futures to hedge their delta exposure. And net for the day, they are buying calls and buying puts. That's shown by the falling blue line of the negative notional value. Let's zoom out for the day. So you can see that Matterhorn pattern, primarily driven by call buyers than call sellers. And the call sellers, you can see the orange line starts to move down just a couple minutes before price, giving you a little bit of a lead on that. Let's go back to the equity signal. Another flow alert. Zoom in on this a bit. And for the equities, the same thing. Call buyers, put buyers, call buyers much more aggressive, much larger notional value. Let's go back to Bookmap. So pretty much just a choppy reaction to the data. Back down to point of control now. That's just above. Right at 56.35, ES 56.35. All right, let's take a look at NASDAQ. A little bit choppy reaction. NASDAQ trading in a range between 482 and 483. All right, let's take a look at setups from this morning. Unless anybody wants to. All right, W. Black says Fed opened to quarter point. I assume that means a cut for the September meeting. That's in the Fed notes. All right, thanks for that update. So sounds like the FOMC is open to a quarter point rate cut. I think that's pretty much known. All right, so W. Black again, thanks for that update. All right, let's take a look at NASDAQ. So there's the NQ futures and Bookmap. Let's take a look at the hero signal. All right, so just like the S&P 500, there are two signals that we can take a look at. There's the NASDAQ index signal, very choppy today, not much there. And I'm just going to move on. So that is like the index signal for NASDAQ, combining options trades and market maker hedging activity for NDX and QQQ. Very choppy signal today. Sometimes it is very helpful, not so much today. So let's move on to the MAG 7 signal. What this is showing is options trades and market maker hedging activity for all 7 stocks known as the Magnificent Seven: Apple, Amazon, Google, Meta, Microsoft, Nvidia, Tesla. These stocks make up a very large component of the NASDAQ 100 and can often drive price. And we'll see that. See how Nvidia is driving this signal with this Matterhorn pattern in just a couple of minutes. All right, so there's the MAG 7 signal. That's what we'll take a look at. Similar to the S&P 500 equity signal, which is really just the which is MAG 7 plus 493. Bullish morning. And then the final Matterhorn pattern. Price reverses lower as traders take negative delta positions. All right, let's go take a look at Bookmap. Again, focusing on this warning. We know in the morning the MAG 7 signal was bullish. MAG 7 signal bullish, reversed a little bit, then shot higher, setting up the Matterhorn pattern. Watching in Bookmap, you can see again volume dots, aggressive buyers on the way up, also buy stop orders, shown by the rising yellow line. Large traders buying on the way up, not very much size, but that is shown by the rising light blue line. Aggressive sellers start to come in as price makes it up to the weekly, daily and weekly expected moves. Price reverses lower back down almost to the 480 absolute gamma strike for QQQ. So nice. There's a long setup, then a short setup. All right, so that's NASDAQ. Let's move on. Let's take a look at some stocks. We'll go back to real time and see. All right, so NASDAQ just grinding up. Sounds like no significant news in the FOMC minutes. All right, so I have several stocks I want to take a look at. First is Apple. Let's see what options traders are doing this morning in Apple. I'm going to shift to puts and calls. Always like to do that for stocks. Let's move on to Apple. Apple, a very large component of the NASDAQ 100. There's Matterhorn pattern. So in the morning, traders were aggressively buying calls. When traders buy calls, market makers sell the calls. They have to buy stock to hedge their delta exposure. That's shown by the rising orange line. Call buyers take the foot off the gas. One last push. Then they take the foot off the gas so far for the rest of the day. So really, call buyers in charge of price, driving price for Apple today. Let's go take a look at Bookmap now. So call buyers driving price. Again, the final Matterhorn pattern. And this pattern is typical of stocks. Bullish in the morning, mid-morning, call buyers take the foot off the gas, or put buyers, and price moves lower and or consolidates. So there are two key patterns in Hero that you can use. All right, let's zoom in on this a little bit. All right, so there's the move higher. Actually, it was a little bit higher than, the reversal happened a little bit after 1042. On the way up, there were multiple tests of VWAP, also this trend line. Here, here, here. And note in the subchart, I have the market pulse price change indicator. I like to use these extremes to confirm entry points, in this case for a long, in an uptrend, price above VWAP, making higher lows, higher highs. I'm looking for deeper pullbacks for safe long entries, confirmed by the market pulse price change indicator. I'm looking, again, for the extremes. In an uptrend, I'm looking for these lower extremes to confirm the deeper pullbacks for a long entry. Oh boy, says the Fed minutes turns out to be a non-event. Yeah, that's not surprising. That is, that's data that, information that has already been out mostly for a while. Of course, that is 3 weeks after the recent FOMC announcement and meeting and press conference. And the market is, of course, pricing in a cut at the September meeting. I haven't looked at the percentage of a 50 basis point cut versus a 25 basis point cut. But it sounds like in the minutes, as W. Black pointed out, the Fed is open to a quarter-point rate hike, which is most likely what is going to happen. All right, so pointing out this market pulse price change indicator, a very good confirmation for, in this case, for long entry. Price breaks below VWAP, below the trend line, and price moves lower as call buyers have taken their foot off the gas. Note the absorption at the 228 level price. Those are limit sellers shown by the heat map and Bookmap limit sell orders, and those are not quite consumed. So classic absorption at that level. Buyers are exhausted. Aggressive sellers start to come in. Price reverses lower, then breaks that trend line as well as VWAP, as again the call buyers take their foot off the gas. All right, next stock I want to take a look at is Amazon. We'll see what options traders were doing in Amazon. All right, so similar to Apple, call buyers driving price higher in the morning. Price breaks above the 180 call wall key gamma strike. Note the flow alert that came in just about 10 minutes after the cash open. Price moves higher. In this case, right around 10:15. Call buyers take the foot off the gas, start selling calls. Price moves lower. Back down to the 180 key gamma strike call wall, and then price looks like has been oscillating around that level. So remember, 180 call wall key gamma strike. Options traders take the foot off the gas right around 10:10, 10:15. All right, so in this case, market pulse change only marked one deep pullback. Not showing this here, but again, the flow alert came in around that time, maybe a little bit later. But a test of VWAP, price moves higher as traders are buying calls. They take the foot off the gas, price moves lower. Back down below the 180 key gamma strike call wall, finds support at 179. Kind of does a double test of that level, kind of a double bottom there. Now price back above the 180 level. Next stock is Meta. Oh boy wants to take a look at Palo Alto Networks. Yeah, I've got 3 more stocks I want to take a look at, then we'll take a look at Palo Alto Networks. Very bullish morning in Meta. Note all the green volume dots. Let's zoom in on this. Meta was moving so fast there really weren't any deep pullbacks. So no deep pullbacks, two extremes. Aggressive buyers really start to come in right around 940 and then come in force right around 945. Note the shift from magenta volume dots to green volume dots. We'll see what options traders are doing. Go to Meta. Let's zoom in on this just a bit so we can see the morning more clearly. Note initially in the morning, so we know that aggressive buyers were already starting to come in right around 940, 945. The call line starts to tick higher. Flow alert comes in 950 as the call line starts to shift higher and price breaks above the 530 key gamma strike as traders aggressively buying calls. So there's your entry point, probably the most conservative entry point, waiting for the aggressive buyers. Price above VWAP. Flow alert comes in, price breaks above that level, and Meta rockets higher up until about 1010. as call buyers take the foot off the gas. They were selling puts too. That's shown by the rising blue line. They start buying puts. Price starts to move lower. Zoom back out. So after that sharp move, traders were selling calls. Put line flattened out. Initially they were buying puts. Now the put line is pretty much flattened. They've started to buy calls again. Now price trying to recover. Still above the 530 key gamma strike. Looks like that level was tested and acted as support right around noon. Let's go back to Bookmap. Quick move higher. Meta rockets higher. Call buyers take the foot off the gas. Price moves lower. Back down to the 530 key gamma strike. Find support there. Call buyers start to come in. Price moves higher. All right, the next stock I want to take a look at is NVIDIA. Pretty choppy action here in NVIDIA. Let's just see what options traders are doing. It looks like call buyers were driving price action and still driving price action. Note the notional value of calls versus puts. Calls, orange line, 155 million positive, and puts just right around 2 million negative. So puts not significant today. Call buyers and sellers driving price. Choppy but hero signal rising. This pattern should look familiar. Move up, flatten out a little bit. Matterhorn pattern. Call buyers start selling calls. Price moves lower. Looks like NVIDIA found support just afternoon, and traders stopped selling calls and now have started buying calls. So call buyers and sellers definitely driving price for NVIDIA today. Let's take a look at Tesla, then I'll get to Palo Alto Networks. Also pretty choppy action here in Tesla today. Let's see what options traders are doing. Go to Tesla. Sharp reversal pattern in Tesla as well. Now this was earlier than the indexes. Aggressive call buyers in the morning, top with a flow alert. These flow alerts signal significant options activity and can often signal a reversal, kind of a mean reverting price action as the hero signal shifts from, in this case, from positive delta to negative delta, giving you just a little bit of a lead, an indication of that pending reversal. As traders stop buying calls and start selling calls, price drops lower. Here's another flow alert. It looks like in this case the hero signal flattens out at that point, and traders do start selling puts, and price tries to recover. All right, so that is from about somewhere between 9:50 and 55 down to 10:15. So flow alert to flow alert. Let's go take a look at Bookmap. Zoom in on this. So remember, in the morning, traders buying calls, taking positive delta positions, double bottom at 221, then price reverses lower as traders stop buying calls, start selling calls. Tesla finds support at 219 as traders stop selling calls, start selling puts. Price moves higher. All right, so there's Tesla. Tesla is a stock that is almost always heavily driven by options traders. All right, oh boy, we'll take a look at Palo Alto Networks. Then we'll go back and check on the indexes. All right, so I don't have Palo Alto Networks in Bookmap, but we can take a look in Hero. I'm going to shift to the total signal here. Probably going to have to jump to avoid the auto zoom. All right, so Hero signal really starting to rise pretty sharply in NVIDIA. Let's go back to Palo Alto Networks. I had to do that to avoid the auto zoom when shifting from puts and calls to total. So it looks like there is a strong correlation between options trades and market maker hedging activity, at least after this reversal right around 1045. Traders start taking negative delta positions. Price moves lower. Price now consolidating as they have taken the foot off the gas about 12:15. Note the notional value here. This is fairly small. Just over about 9.5 million negative. Let's compare that with NVIDIA at 204.6 million, which is actually pretty small for NVIDIA. All right, oh boy, hope that helps. If anyone else has any stocks they want me to take a look at, please let me know. I'll be glad to do that. Go back to the S&P 500. The index signal moving higher. Equity signal also moving higher. So I'm sure the MAG 7 signal is also moving higher. Let's go back to Bookmap. All right, so the S&P 500 now moving higher since this test of the SPY 558 volatility trigger just afternoon. Some consolidation at the SPY 560 large gamma 2 level. And now S&P 500 grinding higher, maybe back up, probably back up to the upper weekly and daily expected moves. Check NASDAQ. All right, oh boy, W Black, you're welcome. All right, NASDAQ also grinding higher. After the move higher just right around noon. Back up to the expected moves for NQ. All right, last call for stocks. S&P 500, NASDAQ grinding higher. And again, as W. Black said, nothing significant. Oh boy said the Fed minutes turns out to be a non-event. That's right. Not much. Price continues to grind higher. Again, back up toward the weekly expected moves. All right, everyone, I'm going to wrap it up. I want to thank everyone for watching. Thank you very much for your questions and comments. Remember, on Friday, tomorrow, there is some data in the morning. Might be a market mover, probably not. Typically low impact data. And then high impact, FOMC Chair Jerome Powell speaking at 10 a.m. at the Jackson Hole Symposium. And we'll talk about that on Friday afternoon. All right, everyone, have a great afternoon, and I will see you on Friday. Thanks. Bye.